Bitcoin or any other cryptocurrency is one thing Warren Buffett will never invest in. It's been dubbed rat poison squared, miracle and gambling device by him. But it's his Berkshire Hathaway second-in-command, Charlie Munger, who despises it the most. He compared Bitcoin to trading turds and called it simply dementia. Buffett was giving a Samsung phone containing Bitcoin by cryptocurrency pioneer Justin Sun earlier this year. He donated the Bitcoin to the Glide Foundation in San Francisco, keeping his promise that neither he nor Berkshire would ever possess cryptocurrencies. Warren Buffett's long-standing disdain for all things cryptocurrency reveals a lot about his financial philosophy. In this video, we'll be looking at why Buffett hates crypto and would never invest in Bitcoin or any other cryptocurrencies. Before we begin, make sure to hit the subscribe button and turn on the notification bell. Done? Let's get started. This has been a pivotal year for Bitcoin as well as cryptocurrencies in general. Bitcoin's price not only reached an all-time high of almost $63,000 in April, but it's also taken significant steps towards popular acceptance. PayPal adoption is one of them, as is the first 100% crypto Visa transaction. While the price of Bitcoin has dropped somewhat in recent months, it is still up over 300% from the same time last year. Nonetheless, some of the most prominent high-profile skeptics of Bitcoin remain, including finance guru Warren Buffett. Buffett said Bitcoin as probably rat poison squared in 2018. The following are some of the causes for this. Warren Buffett favors businesses and assets that generate value on their own. If you invest in a farm, for example, there is value in what the farm produces each year, even if the stock does not increase in value. You don't have anything that is creating anything if you buy something like Bitcoin or some cryptocurrency, Buffett commented a few years ago. According to Yahoo Finance, you're simply hoping the next guy offers you a better deal, and you only believe you'll find the next guy willing to spend more if he believes he'll find someone willing to pay more. Same reason Buffett dislikes gold is because of this. Many individuals are buying cryptocurrencies without fully understanding the technology underlying them, which is one of the causes for the fear of a cryptocurrency bubble. A huge majority of over 10,000 distinct cryptocurrencies now on the market are destined to fail. As an investor, one approach to start separating the wheat from the chaff is to gain a better grasp of what blockchain can achieve and how it operates. In 2018, Buffett told CNBC, "I get into enough difficulties with subjects about which I believe I have some knowledge. Why should I take a long or a short position in something about which I have no knowledge?" For the same reason, Buffett avoided tech equities like Apple, Facebook, and Microsoft at first. That's not to say those stocks were bad investments. It just means his tried and true investment method took him a different way. Cryptocurrencies are simply one of the several options for investing your money, each with its own set of risks. What is important is that you establish your own objectives and devise the ideal plan for you. Bitcoin promised to be the world's first decentralized digital currency. When it originally launched in 2009, it made it possible for you to send money to someone else without requiring the assistance of a bank or the government. It's a reasonable point of view. Indeed, the fact that Bitcoin isn't a great digital currency is one of the reasons it has generated so many other cryptocurrencies. Even Mark Cuban, a wealthy investor who retains 60% of his crypto holdings in Bitcoin, believes it is too slow and inconvenient to use as a currency. He does, however, consider Bitcoin as a valuable store of value. Buffett hasn't gone as far as Berkshire Hathaway Vice Chairman Charlie Munger, his right-hand guy. Buffett has recently refrained from criticizing Bitcoin for fear of upsetting the tens of thousands of Bitcoin investors. Munger, on the other hand, has no such reservations. He said he wasn't interested in money that is so handy to kidnappers and extortionists during the company's annual meeting this year. "The entire darn trend is horrible and detrimental to civilization's interests," he said. It is up to you to decide if you agree with Buffett and Munger. Perhaps you're familiar with blockchain technology and optimistic about Bitcoin's future. Perhaps the thought of purchasing a non-productive asset appeals to you. Alternatively, you might wish to invest a modest portion of your money in cryptocurrency. You are the only one who can decide what is best for you. One of Buffett's most important lessons is to only invest for the long term. That is to say, if you acquire Bitcoin, you should do it because you believe it will appreciate in value over time. We've seen how erratic the price can be just this year. It's pointless to invest in the hopes of making quick money. You could simply lose everything. Set up an account with one of these major cryptocurrency exchanges if you feel Bitcoin will do well in the next 5 or 10 years and are comfortable holding on through the troughs. When it comes to Bitcoin, the billionaire investor wants to be clear. Buying Bitcoin is not an investment like buying stocks, bonds, or real estate. Buffett claims that this is due to a lack of fundamental value. In an interview with Yahoo Finance, Buffett states, "If you buy something like Bitcoin or some cryptocurrency, you don't have anything that is creating anything. All you can do now is hope that the next man pays more. And you only believe you'll find the next guy willing to spend more if he believes he'll find someone willing to pay more. When you do that, you're speculating, not investing." The Berkshire Hathaway CEO, known for his buy and hold investment philosophy, created his company and his $82.8 billion net worth by investing in companies with significant value. Put together a portfolio of firms whose aggregate earnings march upward over time, and the portfolio's market value will march upward as well. Buffett wrote to shareholders in 1996, "Don't even consider holding a stock for 10 minutes if you aren't willing to hold it for 10 years. According to Buffett, what you're buying has to be worth something on its own to be considered an investment. If you buy something like a farm, an apartment house, or an interest in a business and look to the asset itself to evaluate whether you've done something, what the farm produces, what the firm makes," Buffett tells Yahoo Finance, "it's a perfectly good investment. You look at the investment itself to see if it will provide you a return. You could still buy farms and have a perfectly excellent investment if you banned trading in farms." Buffett adds, "Bitcoin, on the other hand, only grows in value as it is purchased and traded," he claims. Its worth is determined by how much others are ready to pay for it. If you forbid trade in Bitcoin, which no one understands, people will say, "Well, why in the world would I buy that?" The Oracle of Omaha has been saying this about cryptocurrencies since at least 2014, when he told CNBC, "It's just a mirage. The concept that it has some great fundamental worth," Buffett added, "is just a joke in my opinion." From JP Morgan Chase CEO Jamie Dimon to NFL players, Bitcoin rose from under $1,000 at the start of the year to over $19,000 in December, capturing the interest of everyone from JP Morgan Chase CEO Jamie Dimon to the general public. According to CoinDesk's price index, Bitcoin was trading near $8,900 on Tuesday. The digital currency, according to Buffett, has a grim future. In January, Buffett told CNBC, "In terms of cryptocurrencies in general, I can say with almost certainty that they will come to a disastrous end. I have no idea when it'll happen, how it'll happen, or anything else." Of course, Buffett has been proven wrong in the past when it comes to investing in innovative technologies. He squandered opportunities to invest in Google and Amazon, which he now regrets. In May 2017, Buffett told shareholders, "I didn't think founder Jeff Bezos could thrive on the scale he has." Buffett has confessed that he does not comprehend blockchain-based coins, according to crypto aficionados. Many other investment professionals, including CNBC's Jim Cramer, Kevin O'Leary, and Tony Robbins, consider cryptocurrency purchases to be a risk. They propose imagining it as a game of chance in Las Vegas. In December 2017, O'Leary told CNBC Make It, "As long as you can afford to lose everything you put into it, go with it." Buffett is fine with such an approach. If you want to bet that someone else will come along and pay you more money tomorrow, Buffett tells Yahoo Finance, there's nothing wrong with it. That's a different kind of game. That is not a sound investment strategy. Did you find this video informative or interesting? Let us know in the comment section below. Make sure to subscribe so you don't miss out on my future videos. Don't forget to like and share.